everyone. Welcome to SCORE Minnesota's evening workshop. We're going to be giving you some amazing information tonight. I am really excited to have three wonderful volunteers and dare I say experts helping you this evening, talking about some updates with PPP. First off, I want to welcome everyone. We do have a poll we're going to be launching here, and I'll do that just a little bit after the intro. And that poll is going to help us in understanding a little bit more about your business. And certainly that's something that we're always interested in, learning more about you, learning more about the participants that we have, because we've got over 100 folks here this evening that are joining us. So very excited to have you here with us this evening. If you don't know a lot about SCORE, we definitely want to share with you who we are and what we do. SCORE is a national organization. We are part of the SBA, and there are over 300 chapters nationwide in this organization, over 11,000 volunteers of men and women who are mostly retired business professionals. Some are still in business. And they're really here to help you, whether you're looking at expanding your business, whether you're looking at starting a business, whether you're looking at exiting a business. We have mentors that can help you through every one of these steps. And in addition to that, we also have workshops like the one that you're on currently. And this particular workshop is going to give you some information about funding, and you're going to have lots of good insight. So if you're looking for a mentor, if you're looking for help in any of these stages of your business, please jump onto our website and learn more about this. Obviously, we could not do this without our sponsors, and we're so grateful for them. They provide us with the financial support to continue to present programming like this, and also to give you the mentoring that you need in each of those stages of your business. So I want to go into the polling for the folks here who are doing our workshop this evening. If you wouldn't mind terribly, please fill out the poll. I'm going to launch this. You're going to see it come up on your screen. If you would please take a minute to answer these few questions for us, and that will help our presenters in determining who's here and what your needs are throughout the presentation. So if you wouldn't mind just doing that for us in the next couple of minutes there. While you folks are filling that out, I do want to welcome our speakers. We have three speakers this evening, and Barry is going to be introducing Alan as well as Brandon. However, it's my pleasure to introduce Barry to you all. Gosh, where would our chapter be without Barry? He does so much for our organization, but Barry retired about 36 years ago as president of a healthcare industry management consulting firm. His work in healthcare provided expertise in developing operational, strategic, and financial systems that helped his clients implement strategic business and marketing plans to improve performance. So, these are the type of people that mentor our clients with SCORE, and that's free to you. So, I mean, gosh, these expertise are just amazing. He has extensive experience in getting to the heart of complex operational, organizational, and financial issues necessary to grow his client's business. And he has his undergraduate and graduate degrees in business administration from the University of Illinois and the University of Pennsylvania, respectively. So we're super excited to have Barry kind of spearheading this and working closely with Alan and Brandon to bring you folks some great information tonight. I'm going to give you just a few more seconds to finish out the polling. Looks like we've got some more responses coming in. I like to get to about 50% before we end the polling so that we've got some good folks there, but I think we're good to go. And that will give you guys some good information moving forward.
Would you like me to introduce Alan and Brandon now?
I would love that, Barry. Thank you so much.
Okay, can you go to the next slide?
I certainly will.
Great. That was just a disclaimer that we don't know all there is to know, but these are our speakers. I'm joined today by both Alan Gassman and Brandon Ketron. They're attorneys in Clearwater, Florida. In introducing these guys, I'd like to just say a few words about them and their experience and expertise. Alan is an estate planning and trust attorney who graduated from the University of Florida Law School. He's a noted author. He writes for Forbes magazine on many issues. Much of the information that I've used in the past and referenced in my slides has come from Alan. He's an exceptionally knowledgeable guy. They also have, his firm also sponsors webinars dealing with COVID-19 related financial information. Brandon is also an attorney with Alan's law firm in Clearwater. He graduated law school from Stetson College, and he did his undergraduate work in both accounting and business, and he's a CPA. Probably the very best compliment that I can share with the audience about Brandon is something that Alan has said more than once during their webinars on Saturday mornings. Alan said that any of the easy questions they've had on a particular topic, the audience could send them to Alan, but all the tough questions to send to Brandon. And that's been true. He's been a remarkably wise counsel. He offers great advice. And I'm so happy to have them join me in the conversation. So with that, we can go on to the next slide. So we're here to talk about the American Rescue Plan Act. It was a huge act with almost $2 trillion. It was very comprehensive and complicated. It had provisions in it to help individuals, help companies, and help municipalities and states. It was a very thoughtful, huge federal program. Next, please. This is a list of many of the individual components of the American Rescue Plan Act. But today, given the amount of time and given the audience that we have, we're going to focus on 5 topics. The PPP loan program and the updates that's changing all the time. The EIDL loan program. Another topic that, in my view, is going to be critically important to every single business owner, and that's the employee retention credit. And then if you own a restaurant or you are in the restaurant industry, Brandon's going to talk about the Restaurant Revitalization Fund. And lastly, I'm going to touch on, at a high level, something for what's called shuttered venues. So with that, let's get into it. Next slide. Here's the overview of the PPP program. It started last year. You had to have 60% of the money that you applied for to be used on payroll. It started off with 2.5 times an average month's payroll as the amount of the loan. If you used all the money that you got and they had at least 60% of it on payroll, the SBA would forgive your loan and you would not have to pay it back. It was an exceptionally successful program, even though it had its share of fraud. Next slide, please. Because it was so successful, the SBA decided last week to extend it until the end of May. Now, today on CNBC, there was a quote from one of the SBA officials that said that they think the money may run out before the end of May. So as we talk about the PPP loan program, either if you've never applied or you want to apply for a second round, you may want to consider expediting your decision. The government put in over $7 billion more. They expanded the scope of the program to include nonprofits and publishing organizations and other things. Next slide. So it's available to people who've never borrowed before, and it's available to people who were borrowed before, had a PPP loan, and want to have a second loan. But in order to have the second loan, you had to show that in any quarter of last year, you had a 25% decrease in revenue from the same quarter the year before. If you could not prove that you had a 25% decrease in revenue in any one quarter, you would not be eligible for a second round of PPP loans. The loan forgiveness requirements are essentially the same. And based on the throughput of the amount of loans being generated by the lenders, it still continues to be a very successful program. Next slide, please. One of the important things is that on this webinar, we have people who are business owners who own, fairly decent sized businesses, but we also have a number of SCORE clients who are independent contractors or sole proprietors. Now, before the rescue plan came out, they used net profits in order to figure out how much money you could borrow. Well, that changed. With the rescue plan now, they base it on the gross income of your business. That means there's a lot more revenue that you can count towards getting a PPP loan. Secondly, they added a lot more expense categories than they had before. So this is just the government and the SBA trying to make it a little easier for small businesses to borrow money that will be forgiven under the program. Next slide, please. Now, for some of you who may be thinking about getting a first or second round loan, you may have heard that some banks and other lenders have stopped taking applications. Well, that's true. But there are a number of banks here in Sarasota, Manatee counties that are still offering PPP loans. All you need to do is put in Sarasota, Manatee County in Google and put in PPP loans and you'll come up with 5 or 6. Now, in addition to those lenders, there's an organization called NAV. NAV is a company that matches borrowers with companies that are loaning money. They themselves don't make the loans, but it's a very positive opportunity for people who are thinking about getting a PPP loan to go to nav.com/PPP, and you'll get a list of banks and opportunities to apply. For the applications, there are links in my presentation for the application forms for either first or second borrowers, but some banks have their own applications on their portals. You'll have to check that out. Next slide, please. Now let's take a minute and talk about forgiveness. We're 12 months into the PPP program, and the covered periods range from April of last year all the way through now. So if you're thinking about but not have yet applied for forgiveness, a couple of important points to consider. Number one, if you borrow less than $150,000, which the SBA said was the majority of borrowers, you do not have to provide additional documentation. All you have to do is fill out an application for forgiveness. Next slide, please. Here are, here are links for borrowers who have borrowed less than $150,000 and those borrowers who borrowed more than 150 grand. If you go to those websites, it will give you all the details. Next slide, please. Now, as I've said in the past webinars, and I just want to repeat, that even though you may not have to provide the documentation, that is, you don't have to electronically send it in for some of the lenders, you will have to keep and maintain it for 4 years. And here's a list of all of the payroll related costs that you're going to have if and when you are audited. Next slide, please. In addition to the payroll costs, there are other costs associated with the PPP loans, and so that you are fully prepared if and when the government comes knocking on your door asking you for your documentation. The slide before this and this slide are really important slides to keep so you know what to expect. Next slide. I'm going to segue into the economic injury disaster loan known as EIDL. When the rescue plan was signed, they added $10 billion of funding for loans and another $5 billion for small businesses with less than 10 employees and who had at least a 50% decrease in their revenue. So if you're a small business person and your business really suffered, there is now substantial money available for an EIDL loan. Next slide. Starting this week, the loans will go from $150,000 all the way up to $500,000. The rationale and documentation for that is going to be the same. Next slide. Now, I'm going to spend a minute on this slide because this is really important. When you used to take out a PPP loan and you had an EIDL advance, not a loan, but an advance, they would take the amount of the advance, and when you applied for forgiveness, they subtracted it. So for example, if you had a $20,000 PPP loan and you're ready to apply for forgiveness, but you had a $5,000 EIDL grant, the way they figured it is that you could get forgiveness for the $15,000, but you still owed the $5,000. But it changed, and it's much, much easier and much better now. So now under the rescue plan, if you have a PPP loan and you paid it off, and they subtracted the amount of the EIDL advance from your loan, and you still have to pay it off, what the SBA is saying is, hey, guess what? If you pay that off, even though the new law says that we're going to waive that, the IRS will send you a check for the amount of the advance that was subtracted from your PPP loan as long as you've already paid it. A little complicated, but certainly good news. Next slide. Now, excuse me, I get choked up. Going from the EIDL loan to an EIDL advance. An EIDL advance is a grant. That means you didn't have to pay it back, but they changed the law under the CARES Act, and it goes like this. Now, if you're only businesses that applied for a grant but didn't get it, but you meet the new criteria, you're now eligible. But if you didn't apply for an EIDL grant before, you're not eligible now. Next slide. So to qualify for the entire $10,000, or it's $1,000 per employee, here are the criteria that you must meet. A, you have to be located in a low-income community. 2, you have to have suffered a loss greater than 30%, and you have to be a small business under 300 employees. So they've narrowed the criteria greatly for the advance. But if you are eligible for the grant, they will send you an email. You can't apply. They'll send you an email because you applied and didn't get a grant before, and you can go through the whole process. Next slide, please. Another bit of good news for the rescue plan is that the amount of time that you need to pay off your first payment has been extended. So if you got an EIDL loan in 2020, you now have 2 years, 24 months to pay off your first payment instead of 12 months. If you got your EIDL loan in 2021, you have now 18 months to pay off your first payment. So they're making it much more flexible for business owners to begin paying off their first payment of the EIDL loan. Next slide, please. So in closing, this is just a bit of summary about the history. The EIDL loan rate is 3.75 if you're a for-profit business, 2.75 if you're not-for-profit. The loan is amortized over 30 years, and you can pay anytime, prepay anytime you want. So in summary, those are the key issues regarding both the PPP loan updates and the EIDL updates. And now I'd like to turn the program over to Alan, who's going to talk about the employee retention credit. Alan?
Okay, thank you. Thank you very much, Barry. It's a great pleasure to present with you. Brandon and I are so impressed with Barry. We offered him employment as soon as he graduates from law school. He can join our firm because he thinks like a lawyer. And I mean that as a compliment, by the way. I also want to compliment the people on this webinar who have sent us questions, because the questions, quite honestly, are pretty darn challenging. If I've answered your question, that means it was an easy one. If we haven't answered your question yet, that's because Brandon hasn't answered your question yet. Because there are some hard ones. This is kind of like playing Jeopardy, because you know, it's like playing Jeopardy and only getting the $100 and $200 questions, and then Brandon handles the $300 and $400 and $500 questions. So let's talk about the employee retention credit. You know, to get the EIDL loan and to get the PPP loan, you have to have a substantial economic need, an economic necessity for the PPP loan, and substantial economic damages for the EIDL loan. And quite candidly, a lot of businesses just don't have these anymore because they're up and running, they're making money, so they may not qualify. But the employee retention credit has no need requirement. If you qualify for this, you simply get it. And you didn't apply for it last year because you were told if you got the PPP loan, you couldn't get the employee retention credit, and the PPP loan was probably a lot better. So now, if you had a 50% reduction in the revenues, and Brandon's going to tell you what revenues mean, during a testing period for 2020, you can go back and get this up to $5,000 per employee based upon 50% of the payments that you made to employees. So it's a great thing. It's a wonderful thing. Unlike PPP and EIDL, which comes to you tax-free, the employee retention credit will cause a reduction in your tax deductions for 2020. If you get the credit this year, then what you paid the employee that allowed you to get what you get in the credit causes you to lose the tax deduction in an equal amount. So basically, this is taxable. But fortunately, we think it's taxable last year when you were probably in a lower bracket than you're going to be in this year. So Paula, let's go to the next slide, because I've already said everything I can remember without looking at a slide. So what does this tell us? Number one, you're going to get a payroll tax credit for these wages. Number two, you can apply for it retroactively. You can apply for it now because you earned it already. Number three, it can be applied for going forward by second draw recipients. So if you got a first PPP loan, you can apply for this. And even if you get a second PPP loan, you can apply for this. Number four, for 2020, you get up to 50% of up to $10,000 for wages paid to the employee. So if I paid one employee $12,000, I get $5,000. If I paid another employee $8,000, I get $4,000, but I can't get more than $5,000 for the whole year of 2020. Now let's talk a little bit about 2021. It's much more generous. First of all, I can get up to $7,000 per employee. That's 70% of the first $10,000 per employee. And unlike 2020, where it's a total of only $5,000 for the year per employee, I can get the $7,000 in the first quarter and in the second quarter and in the third quarter. etc. So it's a very, very generous program. Now, if I used the wages to pay wages to my employees, which obviously I did, and I put them on my PPP loan forgiveness application as wages towards my forgiveness, then I can't get the credit. But the good news is almost everyone on this webinar has more than enough wages from other periods of time, well beyond the 10,000 per employee that you can use. So you should be able to get full PPP forgiveness, but you need to talk to your SCORE advisor or your accountant and be very careful that your PPP application does not include the wages that are going to be appropriate to get you your ERC loan. I mean, your ERC credit. So Brandon, do you want to go through the example here? And as always, correct me on anything I got wrong.
Yeah, no, so far so good, Alan. I don't have any corrections yet, but just to walk through a simple example here of how this works. So first of all, for 2020, in order to qualify, you have to have a 50% reduction in your revenue when you're comparing one quarter in 2020 to the same quarter in 2019. And we'll go through some examples in some future slides as to how that works. But when you're down in a quarter more than 50%, you qualify. So you can get the credit for up to $10,000 of wages, $5,000 max for the entire 2020 year. You can also qualify for this credit if your business is considered partially suspended or shut down by a government order. So if you're in the restaurant industry and you had to limit your indoor seating because of a local government order, then that can qualify you for this retention credit, regardless of whether you had a drop in gross receipts or not. That suspension, it's an either or test. So it's either a drop in revenue or a suspension of the business. For 2021, you only have to have a 20% reduction in revenue in order to qualify in any quarter. And we're comparing the same quarter in 21 to the same quarter in 2019. And again, we'll go through some examples as to how that all works. But to talk through, put some numbers to this, just so you can see how significant this is. We take an employer that has just 10 employees, paying them $40,000 a year. They meet the gross receipts reduction tests for all 4 quarters, presumably in 2021 under this example. Well, they can get $7,000 per employee per quarter. So 10 employees times $7,000 per employee, that's $70,000 a quarter. That's up to $280,000 for the year for this business to reimburse them for retaining employees when they have a revenue reduction or a suspension of the business. So if you qualify, you can see how significant this is. We can flip to the next slide. So here's the statutory language for 2020. As we said, to qualify, you have to meet one of these 2 tests. So number 1, you have to have your business either fully or partially suspended due to a government order. It has to be related to COVID. Or number 2, that you have a 50% reduction in your gross receipts when you're looking at 2020 compared to 2019. And you continue to qualify up until the point in time where you have a quarter that gets up to 80% of the gross receipts back to the prior year. So that's better illustrated through some examples. It's a little bit confusing in the language, but we'll get to some examples. So let's flip to the next slide. Now, there's a few different rules, and I think the most confusing aspect of the retention credit is trying to remember what applies in 2020 and then what applies in 2021, because there's slight differences as a result of 2 different acts that expanded this to 2021 and then changed the rules. So the main thing to remember here for 2020 is the distinctions between large employers and small employers. So in 2020, a large employer is anyone with more than 100 full-time employees. And that's just full-time employees. It's not a full-time equivalent measure like you have to do for PPP, and you add up all the part-timers to get to full-time equivalent. That's not how it applies for the ERC. It's just strictly you count your full-time employees. If you have less than 100, you're a small employer. If you have over 100, you're a large employer. Now, if you're a large employer, there's certain limitations that apply. And the first main one is you only get the credit to the extent that you paid wages for someone that is not providing any services to the company. So essentially, they're staying at home, not working at all, and you're paying them out of the goodwill of your heart just to keep them employed and providing them with a paycheck. That's the only way you can get the credit if you're a large employer. Now, they can still be working part-time and you can still get the credit. So if they work 20 hours a week and you pay them for the full 40, you can claim the credit on that 20 hours that they weren't really providing any services. The other limitation is you can't increase wages and maximize this credit if you are a large employer. You have to pay the employee the same rate of pay that you were paying them prior to receiving this credit. Now in 2021, that threshold goes up to 500. So a lot more businesses can qualify and not be subject to those large employer limitations. And the good news is for small employers, that's less than 100 in 2020, less than 500 in 2021. If you paid wages to an employee, you get the credit as long as you meet the one of the two tests. There's no limitations on increasing wages. So if you were paying someone maybe $9,000, you could bump them up to $10,000 a quarter to maximize the credit. You can pay them if they're working, you can pay them if they're not working. All wages would count here for small employers. Okay, next slide. So when we're looking at whether the business is suspended or not for purposes of qualifying for the credit, it's all dependent on whether the test is more than a nominal portion of the business operations cannot be performed remotely in a comparable manner. So just because you have a shutdown order that affects your business doesn't necessarily mean you qualify for the credit. You have to take into account whether you can perform comparable operations at home, whether it's more than a nominal portion of your business that's impacted. So you have to consider this. So for example, our law firm, in the beginning of the pandemic, there was concern that we might have to shut down and everyone go and work from home. Well, that order would shut down our business, but we would all be able to continue comparable operations working remotely, and it wouldn't really impact our business in more than a nominal manner. So that wouldn't qualify us for the retention credit. We would have to have a gross receipts reduction in order to qualify. Other example, though, if you think about restaurants, order shutting down indoor dining, that definitely is more than a nominal impact on the business. So that would be considered a shutdown order. If you're a store that had to reduce hours, that's considered a shutdown order. So there's a lot of examples in the FAQs and notices provided by the IRS and on the IRS website that go through detailed examples and some explanations as to what's considered a shutdown. But the main test is that it has to impact a portion of your business that accounts for more than 10% of your gross receipts in 2019. So again, going back to my restaurant example, if the indoor dining portion of that restaurant accounted for more than 10% of the gross receipts of the restaurant during 2019, and there's an order that limits and shuts down in-store dining, then that's going to be enough to get you qualified for the retention credit. Now, if you're a drive-through and maybe you don't have indoor seating and the order impacts indoor seating and it doesn't rise to 10% of your total gross receipts, then even though that order is out there, it wouldn't necessarily be a partial suspension for purposes of the retention credit. And I think it's also important to note here that even just a small portion, as long as it's more than 10% of the business is impacted, then you can qualify. So they have an example under the guidance that's issued under the IRS notice of a restaurant that is completely open for outdoor seating, completely open for takeout and delivery, and open inside, but they have to have tables more than 6 feet apart. And because of that 6 feet limitation, they had to remove 2 or 3 different tables and limit their capacity. That rises to the level of a partial suspension under the examples, and that restaurant can qualify for the retention credit. So it's not a large test that has to be met here, and a lot of businesses can qualify for this even if you don't have a revenue reduction. So let's go to the next slide. There's more guidance here. This is the language from the IRS notice on it that goes through how this 10% threshold test works. So we'll skip over that, but it's there for reading. So next slide. Okay, so Alan, before I move on here, any questions or comments on the qualification based upon the partial suspension or the reduction of revenue so far?
No, you're doing.
I think they're going to hold some of the questions until the end.
Okay. Okay. All right. So then how do we actually claim this credit, and what does it actually serve to reduce, and how does it benefit the business? Well, you claim the credit, and the process is really easy. On your Form 941 that you have to file quarterly to report wages, there is a new line item for wages eligible for the employee retention credit. So you have to go through the exercise with your accountant, with your score advisor, of determining what wages do qualify if you're eligible, adding all those up, and then it's just a line item, one total on the 941 to claim the credit. And that credit amount, you can apply it in really 3 different ways. Is number one, you can reduce your deposits that you would otherwise have to pay on that for that 941. So you can reduce your Social Security tax, your Medicare tax, and not have to pay those deposits in. If your credit exceeds those payroll taxes, then you can get a refund of the credit. So you can get cash in hand for the amount of this credit after filing your 941. Or if you don't want to wait until you have to file the 941. So for example, let's say that you qualify in the second quarter for 2021. For reasons we'll get through in examples here, you can request an advance on that credit amount by filing this Form 7200. And that Form 7200 is based upon your 2019 wage level. So you report what you paid in the second quarter for 2019. You multiply that, limiting everyone to $10,000. You multiply that by the 70%, and you can get an advance on the credit in cash after filing this form. And then you have to kind of balance that out when you file your actual 941. If your advanced amount was too much, then you might have to pay a little bit extra in. If it was not enough, then you can request an additional refund or otherwise reduce the amount of taxes that you would have to pay. So pretty simplified process of filing here. The hard part, and we can go to the next slide, is really figuring out what counts towards PPP loan forgiveness and what counts towards the employee retention credit. So let's go to the next slide. We have an example for that. So if you include wages on your PPP loan forgiveness application and count those wages towards your loan forgiveness, you can't count them towards the employee retention credit. And the same thing works in vice versa. If you are using wages towards the employee retention credit, you can also count those towards your loan forgiveness amount. The good news is that only the minimum amount of wages that you need to get loan forgiveness on that application is going to count against your employee retention credit. So if you have a loan of $200,000 and you put $250,000 of wages on your PPP application, only the $200,000 is going to count. That extra 50 can still be carried over and applied for the employee retention credit. So you can run a spreadsheet, you can get with the score advisor and accountant, figure out what wages I want to count towards forgiveness, what wages I want to count towards ERC, and then add all those up and make sure we're maximizing this in both places. So next slide. And I think we can skip forward to a couple here if you want to get to the comparison between the substantiation requirements, I think is probably the next topic to touch on. Yeah, here we go. So there's a couple of records that you do have to keep. The first is you have to have records showing how you qualify. So you have to have a record of the government order that suspended the operations of the business if you're qualifying under that. If you have a gross receipts reductions, you have to have records that show how you calculated that gross receipts reduction. You don't have to submit any of this with the 941 or the Form 7200. You just have to retain these records in the event of an audit. But it's important to do that because we don't want to be scrambling when the IRS comes knocking on the door. We want to have these things ahead of time put into the file That way it's just much easier if we are ever audited. We need to keep copies of records showing the wages paid to our employees. And if we are a large employer, we have to show records that we didn't provide wages to anyone that was providing services and claiming the employee retention credit on that. So lots of records you have to keep, but you don't have to submit anything with the actual 941. We can also count health plan expenses as wages for this, and you can also count those towards PPP forgiveness. Again, the same rules apply. You can't count them in both places, but you can allocate between PPP and the employee retention credit. So next slide. Okay, so Alan, you want to walk through these 2020 versus 2021 changes, or you want me to keep going? Or
I think you're doing great. I've been answering a lot of questions, so
okay,
keep going.
All right, so we prepared these two charts here to really help kind of differentiate the rules between 2020 and 2021. So the water qualified wages, well, it's compensation paid to our employees. It has to be a W-2 wage. So if you're a partner in a partnership, that a guaranteed payment or a K-1 distribution to the partner, not going to count as a wage. If you're a sole proprietor, what you made as net income, that's not going to count as a wage. It has to be W-2 wages paid to your employees. Same rules apply for both 2020 and 2021 with respect to that. So next slide. You can take this in addition to a PPP loan, as we've mentioned. Same rules apply for 2020 as they do for 2021. What you have to be careful about, though, is submitting your PPP forgiveness application. What you're going to want to do is maximize your non-payroll cost as much as possible, so that way you're saving wages for the retention credit if you don't have enough wages to go around for both. So that's something you have to look at. Maybe we include rent, utilities, mortgage interest, worker protection expenditures, all those non-payroll items we're going to want to pull together and maximize as much as possible. We can only include up to 40% of our loan amount for those amounts, but you're going to want to maximize that to the extent you can, so we save wages for this retention credit. As we said, you can be qualify either with the revenue reduction test or a full or partial suspension of the business. And that works the same way for both 2020 and 2021. Next slide. Healthcare costs are included in this, both for 2020 and 2021. And then here is a big difference for the gross receipts test. In 2020, you qualify with a 50% reduction, and you continue to qualify until the point in time where you're back up to the point where you have 80% of the gross receipts compared to that same quarter in 2019. So we'll go through those examples of how that 80% test works and how you know when to start and stop your eligibility period in 2020. Now in 2021, it's a little bit easier because all you have to do is have a 20% reduction in your receipts comparing a quarter in 2021 to a quarter in 2019. Also for 2021, there's an alternative test. You can qualify in the quarter by looking back at the prior quarter to determine your eligibility. So for example, if we're in quarter one of 2021, we can first look at quarter one of 2021 compared to quarter one of 2019. If we have a 20% reduction, then we can qualify. Alternatively, we can step back to the prior quarter, look at quarter four of 2020 compared to quarter four of 2019. And if that's a 20% reduction, then we can qualify that way as well. The good news for that test, though, is if you think about it, if we qualify in quarter one, then we know we automatically qualify in quarter two, because for quarter two, we can step back to quarter one and determine our qualifications that way. So it gives you basically a heads up. If you know you qualify in one quarter, you can qualify for the next quarter automatically. So next slide. What about the number of employees we have? How does that impact the credit? Well, as we said, it all depends on whether you're a large employer or a small employer. For 2020, that large employer threshold's at 100 employees. So if you're less than 100, then you don't have to worry about any of these rules. You just get the credit for wages paid if you qualify. If you're over 100, You only get it if they're not providing any services, staying at home, not working, and you're paying them a wage anyway. For 2021, that threshold's increased to 500, so a lot easier to qualify. How much do I get? Different rules for 2020 and 2021 again. For 2020, 50% of wages up to $10,000, so a $5,000 max for the entire year. For 2021, 70% of wages per employee per quarter. So you get $7,000 in each quarter. So a lot more benefits available in 2021 as compared to 2020. Next slide. I think we've talked about how you navigate these for ERC and PPP purposes. You can't count the same thing twice. I've had a lot of questions and some confusion about whether it's, if my covered period is say June to October of 2020, can I just not count any wages for ERC from June to October? And you can. It's not that you, while you have your PPP loan, you just can't count ERC wages. You just can't count the same wages twice towards forgiveness. So you could count, $8,000 of wages in one pay period towards forgiveness, $2,000 of wages of that same pay period towards the ERC credit. As long as you're not double counting in any way, that's okay. It's not that I can't count any wages for ERC while I have a PPP loan. That's not the test. It's just no double counting. I think these others we've already addressed. So I'll go to the next slide. Go ahead, Alan.
Yeah. Why don't we, let me ask you some questions people are asking. So I think, because it's going so fast. Okay. When is the deadline to apply for 2020 credit? And do you file an amended 941 report to get it?
So there is really no deadline. It's all based upon the statute of limitations for filing amended returns. So you have 3 years to do this if you like. It's not any pending deadline by the end of the year you have to apply. That's not the case. You have a 3-year statute to amend the 941. And Alan, you're exactly right. You file an amended 941 for the quarter that you paid the wages that are eligible for the credit in 2020 to claim this. So the 941X is the form. It's a pretty simple form to do. You take your originally filed 941 and you go through down by the lines and say, this is what I reported on the original return. This is what I'm reporting on my amended return, which are all going to be the same. And then you get down to the line item of the employee retention credit. It's going to be 0 for what you filed on your original return, and then whatever the amount is for what you're filing for this amended return. And that's all you have to do to claim the credit. You send that in and you can apply that against your payroll tax deposits. You can request a refund, fairly simplified process. And it's important to know that you can always file an amended return for the quarter that you paid the wages to claim the credit.
I'd like to just jump in for a second for Alan and Brandon. By the policy that we SCORE mentors have, we are not allowed to offer accounting advice. So when you've made reference to contact your SCORE mentor, here's what we would do. We have a list of professionals that we have dealt with in the past who are accounting firms, bookkeepers, attorneys, and we would forward that information to our clients who then could choose whom they want to talk to. But from the presentation so far, my eyeballs are in the back of my head. There's a lot of detail here, and anybody who didn't turn to their accountant to try to get this done would be crazy. Back to you.
That's a very good statement. I agree completely. So should we go to restaurant revitalization since we have 9 minutes?
We go to 7.
Oh, okay. All right. Never mind. Take your time.
Yeah. So we've talked about the credits for 2020 here. Let's go to slide 55 if we can. So I can go through some examples. I think that will help illustrate how this works. There we go. All right, so here's just an example to illustrate whether a business qualifies or if they do not qualify. And this is for 2020. So we know for 2020, we determine our qualifications by looking at gross receipts for a quarter compared back to that same quarter in 2019. So for the first quarter, there's still some eligibility. You have to look at the first quarter because the employee retention credit started on March 12th. So from March 12th to March 30th, that little stub period, if you had a gross receipts reduction in the first quarter, you can claim the credit on those wages from March 12th to the end of the month. So there's not going to be a whole lot there, but there could be some benefits if you do qualify. So in this example, we have a business that had $300,000 of gross receipts for every quarter in 2019. So looking at eligibility in 2020 for the first quarter, they had the same 300,000 of receipts, so that's not an eligible quarter. Going now to the second quarter, they had $100,000 of gross receipts in 2020. That's only 33% of what they had in 2019, so that is an eligible quarter. In the third quarter, and remember, they continue to qualify up until the point where they get to a quarter where their gross receipts are above 80% compared back to the prior year. So here, quarter 3 is eligible, and quarter 4 crosses that 80% threshold, but that quarter continues to be an eligible quarter all the way through the end of that quarter. Once you pass that 80% threshold, then it's the following quarter that doesn't qualify. So this, you can qualify for the second, third, and fourth quarter. You can get up to $10,000 of wages, 50% of those, so $5,000 per employee for the 2020 year. So next slide. Another example here, we had the same business, $300,000 of gross receipts in 2019, but in 2020, they had $100,000 in the second quarter, so that drops them below the 50% qualification, so that is an eligible quarter. The third quarter crosses that 80% threshold, so they continue to qualify through the end of the third quarter, but starting with the fourth quarter, they no longer qualify for the retention credit in 2020. They'd have to drop back down below 50% in the fourth quarter to re-qualify for the retention credit. But here they do not meet that test, so the fourth quarter is not an eligible quarter in 2020. Let's go to the next slide. So now moving to 2021, a lot easier to qualify because you only need a 20% reduction. So we look at 2021 receipts for the first quarter compared back to the same quarter in 2019. So first we test quarter 1 and we have a 20% reduction, so that's an eligible quarter. Now moving to determine qualification for the second quarter, we don't have a reduction in the second quarter. So at first glance, you would think, well, that's not an eligible quarter. But remember, for 2021, we can go back to the prior quarter to determine eligibility. So we can look back at our first quarter. We had a 20% reduction. So that will be an eligible quarter for 2021 because of that prior quarter period. And this applies the same way for the third and fourth quarters as well. Recently extended under the American Rescue Plan Act, you can go all the way out to the end of the year for qualifying for the employee retention credit. Next slide. Now, what wages count for 2020? Again, you only get $10,000 max. So here we have employee A that's paid $15,000 a quarter, employee B that's paid $7,000 a quarter, C that's paid $3,000 a quarter. So A is maxed out, and this is assuming that all 3 quarters qualify by the gross receipts reduction test. Employee A is maxed out at $10,000 in quarter 2. Employee B, you can count 7,000 of the wages in quarter 2, 3,000 in quarter 3 till you get to the $10,000 max. And then C doesn't get to the $10,000 max. They're capped at the wages paid of $9,000. So you would add all those up, take 50% of those, $14,500 will be applied as a credit for this particular employer. So next slide. In 2021, we have the exact same situation, $15,000 of wages a quarter, $7,000 a quarter, and $3,000 a quarter. Well, because we can count $10,000 a quarter now, this business gets significantly more, almost double the credit, $28,000 for the first 2 quarters. And then now we know we can also extend this out for the 3rd and 4th quarter if they qualify. So they could get up to $56,000 for all 4 quarters in 2021, assuming that they do qualify based upon the wages paid under these examples. All right, so I think that's it on the retention credit, I believe. If you want to flip to the next slide.
Well,
Before we move on, yeah, I was going to say, do we want to take questions on the ERC now, or do you have any comments? Or Barry, do you have any comments to add?
I think that what Paul is trying to do is to coordinate some of the questions. Alan's trying to answer some of them. Let's go through the RRF, and I'll finish with the SVOG, and then we'll jump right into the Q&A.
Okay, great. So Paula, let's go to the next slide. Okay, as you can see here, this Restaurant Revitalization Fund provides $28 billion for restaurants. $5 billion is earmarked for restaurants which have $500,000 or less per year in revenues for 2019, and $23.6 billion is earmarked for restaurants who have more volume than that. And the general gist of this is that the restaurant looks at what its revenue was in 2019, and then it looks and sees what its revenue was in 2020, and whatever the reduction was after taking into account PPP revenue is money that the restaurant can apply for. And if there's enough money, then every restaurant will just get whatever its revenue loss was for 2020 and have plenty of money to use to launch forward as this virus hopefully goes away and restaurants can open back up. I think more likely is that there's going to be a lot more in lost volume than $28.6 billion. So every restaurant's going to get a portion of the money that's available. And the SBA, if you can go back a slide, Paula, because you just went a slide forward. There you go. The SBA has the authority to reallocate the $5 million and the $23.6 billion. So it will be interesting to see if they do. Now, quite candidly, most of our restaurant clients cannot apply for this loan because, as you see in the 4th paragraph here, you have to verify under penalty of perjury that the funds are reasonably necessary to support the ongoing operation of the business. Well, if you've survived and you have found a way to make money with takeout and outdoor seating and new ways to go forward, then you can't get this money, even though you may have lost a lot of money before, unless you really have a lot of creditor issues and you really need to add some capital. So this is a tough question for a lot of restaurants. You've laid a lot of people off. You're much leaner and thinner than you were, but you are making money. So you don't automatically apply for and receive this money. So let's go to the next slide.
But Alan, going back to reasonably necessary, I've looked at the information. I've read it a couple of times. I could not see a definition in the act for what is reasonably necessary. Do you have any thoughts on that?
Yeah, Brandon and I have written a couple of articles on this, and you can go to the Forbes blog and search Gassman necessity. There was no definition in the statute. Marco Rubio put out a tweet that said, this is for the PPP program has the same language. This is for businesses that would not be able to stay open if they can't get this loan. That's what Marco Rubio said. Now, we don't agree with that, but that would be the most extreme reading of it. I think the better reading of it is, are you in a financial situation where you don't feel secure running your business because you don't have enough capital on your balance sheet? You don't have enough cash in the bank. And there is a tax called the accumulated earnings tax that applies for C corporations, where if you have too much money stored up in your C corporation, you pay the accumulated earnings tax. And the test of whether you have too much money in your C corporation is whether the money is reasonably necessary, whether the capital on your balance sheet is reasonably necessary to support your business. So there are dozens and dozens of tax court cases on that question. And if it's a close call, the person should contact their CPA or another tax professional, but probably do it under the attorney-client privilege. Probably have your lawyer contact the CPA so that you can keep the deliberations under the attorney-client privilege. So if the SBA comes and investigates, they don't find the emails that you exchanged with your accountant about this, if your lawyer hires the accountant. Barry, was that an answer like you were looking for? You're muted. Yeah, you're muted, Barry.
It was exactly what I wanted people to hear, but we have just a couple more minutes before we got to cover SVOG.
Okay, Brandon, go ahead. What did I miss?
Yeah, so the main thing is, as you mentioned, it's a grant equal to, they call it your pandemic related revenue losses, and that's the difference between your 2019 and 2020 revenues. So you can get that amount if you're one of these eligible entities here. So essentially any place where the primary purpose is being served food or drink. It can include bars, restaurants, distilleries, inns, taverns, brew pubs, so food trucks. A lot of different businesses can qualify. The important part though is, while this is a grant, if you do not spend all the money on the list of permissible expenses, you have to return what you do not spend. So in a way, it might have to be repaid, but most businesses, I think, would have plenty of expenses to go around to soak up the use of the funds. But the important part of this is, again, going to be accounting for that. So keeping records of what you spent the money on, making sure you have receipts. I assume there will be some sort of portal application where you're going to have to go in and report the use of these funds. There's not a whole lot of details out there yet on this yet. I think they're still working on implementing this. The applications aren't open yet, but they're supposed to open up here relatively soon. And we'll just see how this program evolves as we can get some more guidance on it.
Okay. With that, do you want to cover these?
We can go to the next topic, Barry.
Okay.
Paula,
Can we go down a couple more slides? Okay. I just wanted to spend a minute or two on something called the Shuttered Venue Operator Grant. Like the Revitalization Fund, which is a grant, this is also a grant where the government is going to give you money. But in order to be eligible for a Shuttered Venue grant, you have to be eligible under any one of these categories. Now, I have some clients, core clients, who are restaurant owners, and during the week or on the weekends, they take part of the restaurant area. They bring in entertainment, and they may or may not charge for a cover charge. Under the Shuttered Venue Operator Act, that is not a venue that would be eligible for a grant. Next slide, please. Can you go to the next slide? I'm going to cover something else. Basically, if you were in business as of February 29th of 2020, you can be eligible. You can also have a PPP loan and a Shuttered Venue grant. And the applications, as you see at the bottom of this slide, open tomorrow. So if you are one of those categories of businesses that we showed earlier, and you want to apply, tomorrow is the first day that you can apply. It's a complicated process. There are all sorts of information, which I'm going to show you in just a moment. But if you have a business that entertains people, whether you're a museum or you're a movie theater or you're opera or the ballet, you're eligible for one of these grants. Next slide, please. What we don't know yet is whether the Restaurant Revitalization Fund will be organized the way that the Shuttered Venue grants are going to be organized. And it goes in terms of priorities. If you had a huge loss, first 2 weeks when the program opens starting tomorrow is when you can register for a grant. If you had the next 2 weeks are for businesses that had a 70% loss from April through December of last year. And then the third priority is if you had a 25% loss. And then the last category is unrestricted, but you had to have at least a 25% loss. So based on what the government is saying is that the first 2 weeks is for people who lost 90%. Second 2 weeks is for organizations that lost more than 70%. The third 2 weeks is for people who lost at least 25%. And then if there's any money left, people who lost more, or organizations who lost more than 25% can apply. Next slide, please. Quickly, if you are one of those entities, you may have already heard about this, but I wanted to put this up anyway. In order to apply, you need to have something called a DUNS ID number. You go to dnb.com. There's an application for a DUNS number, but you must have that in order to apply for a Shuttered Venue grant. You also need something called a SAM ID. It's part of the government, and you go to sam.gov, and there's information about how to apply for that. But you need both a DUNS number and a SAM number in order to apply for the Shuttered Venue Operators Grant. Next slide, please. So in closing, again, this is a high-level overview. Here are some sources of information. You have a YouTube, you have a portal which explains things, and most importantly, down here at the bottom, you have a series of fact sheets that will give you all sorts of detailed information about the Shuttered Venue grant. And with that, Paula, let me turn this back to you.
Thanks so much, Barry. I know we've got so many questions that are in the queue here, and thank you, Alan, for answering about 62 questions already that have come through. We have a lot of very specific questions, and I'll try to run through some of these. If you guys can jump into and type out messages. Some of them are very specific questions that really should be answered by your CPA, and I think a lot of them may be directed in that manner. But I'm going to start at the top here. One question came in regarding if someone with a green card, someone that does not have a green card but does have a Social Security number, would be eligible for EIDL. And I'm not sure if any of you could answer that question.
To my knowledge, the EIDL application requires a Social Security number. or an EIN, or both.
Okay, does it require a green card or just the social?
I'm saying I don't know. I've never seen that information. I'll ask Alan or Brandon if they have.
Yeah, no, I would just look at the application. The application will tell you. I would apply for it unless the application says, you have to be a US citizen. I don't think you do.
Okay, great. And then another question came in regarding the details of other operating costs and what other expenses are included in PPP loan forgiveness, except for looks like utilities, payroll, et cetera.
Well, there's software that you use for your business. There's supplies that you use. Neither of those were included before. And I would refer the person asking the question to go back to that particular slide, and it listed most of them. I just don't want to go back and try to find the slide now.
Sure, and all the slides as well as the live recording will be sent out to folks, so you will have the opportunity to go back and review the slides that we didn't spend a ton of time on here. This person received information about requesting additional EIDL funds. I have SBA building loan at 6%. Can I request more funds from EIDL and pay my building loan with it to get the smaller 3.75% rate? And I think it looks like, Alan, you're responding to that now.
Brandon, you want to respond to that? Are you muted, Brandon?
Yeah,
Yep, he is.
I don't know that Barry, are they doing a second draw for EIDL if you've already got one?
You can get another one. You can ask for more money. There's a process called reconsideration. The SBA, as we all know, is inundated with many, many different things. A number of our SCORE clients are telling us that it's frustrating sometimes to try to get an answer, but I think that you can certainly apply for more money. You have to have a reason for it. And if you go on the EIDL fact sheet, you'll get the address where you can mail your reconsideration letter.
Great, thank you. Another question here: if my company received a 10K EIDL advance and I'm in a targeted low income community, plus I meet the other criteria, will I be eligible for any additional funds beyond the 10K? I realize SBA makes the contact.
The answer is no. You get the maximum was $10,000 once.
Got it.
As a grant. I mean, that individual can apply for an EIDL for a loan, but there's no, the max cap was 10,000 for the grant.
Perfect. And then Barry, this one to you. Is there a way that you know of to get that elusive email from the SBA regarding the targeted advance?
I've been asked that question by about 4 or 5 clients who are absolutely positively qualified. They did send in the original request for the grant. They were turned down, or they didn't hear anything. I am working with a client right now who provided the information, and it took a couple of months, unfortunately, for the SBA to reply. But when the SBA replied, there was very specific information that my client needed to get. So the short answer is no, there is no place you can proactively go, and but I would wait a while longer. They're certainly backed up.
And then can you safely claim the ERC for an employee based overseas who cannot be claimed on the PPP even during the period PPP is in use? Or would this likely be a red flag or cause confusion?
My gut instinct is that it has to be a US based employee, but I'm not 100% sure on that.
I think it has to be a US based employee.
Okay, great. Thanks, guys. And then the quarter where revenues tanked includes PPP 1 8-week period that has been forgiven. This is from Julie. Will that be a problem if they take the ERC in 2020?
It could be. that's been the hard part about this is a lot of people applied for forgiveness after 8 weeks because they'd already used all the funds and reported, payroll costs. And if that overlaps with the same period and now you don't have wages that you can use towards the employee retention credit, there's no real ability to go back and amend the application to maybe use a full 24 weeks so you could claim those wages for the retention credit. There's also no ability to go back and add non-payroll costs once you've already submitted your application. We're hopeful that the SBA might consider a method to allow for businesses to go back and resubmit PPP forgiveness applications if it would allow for them to qualify for their credit. But so far we haven't received any update on that and don't know if that's going to be allowed or not. But it is unfortunate because a lot of borrowers just didn't think they were eligible for the credit, so they weren't worried about it. And the way they submitted their application impacts the ability to qualify.
This next one is a little cryptic, but I'll try to go through here. The person received CARES grant for a nonprofit covering March to December 2020 and did not apply for PPP. I'm imagining they're asking if they can do that.
I'm not sure I understood the question. I'm sorry.
So apparently this person received a CARES grant for a nonprofit covering March to December of 2020, but did not apply for PPP. Can they apply for it?
So that could be a county grant through the CARES program from either Manatee or Sarasota County. And if that's what the reference is, yes, they can apply for a PPP loan.
This is a great question. I'm not sure we're going to be able to answer it, but what is the turnaround time for getting refunds from the IRS on amended 941 for 2020 at this stage?
Oh, Alan can answer that. Go ahead, Alan.
I don't know.
I was actually just talking to a CPA today, and he told me that he was hearing 2 to 3 weeks on that. Whether that's true or not, that would be pretty nice. That's a pretty good turnaround time for that.
That's a great turnaround time.
We'll see if that's true or not. He was going to update me when he actually got his refund, but that's what he had heard.
This is pretty specific. I'm not sure you guys are going to be able to answer this, but this woman has PEO services, so they're unable to file the 941 separately. As of today, the PEO is refusing to file the 2021 amended 941 for the ERC because they say the IRS has not issued quote unquote guidance. Is this correct?
The IRS issued guidance today.
Got it.
For the 2021, so maybe that will change. But I have heard that from a couple of different clients that I've reached out to, that their payroll service will file 941s claiming the credit, but they will not file amended 941s that the client would have to file them those themselves. So again, it's not a complicated form. So if you can request the prior filed 941 and then just look at the 941X, most people should be able to figure out how to do that, or their CPA or somebody can, or the SCORE mentor can assist them with helping with that.
Is there any change that allows a business that changed ownership in Q3 of 2020 to apply for a PPP loan? The business was operational in 2019 and 2020 prior to the ownership change.
Yes, question mark.
Yeah, I agree. I think as long as the acquired business was in operation before February 15th, right, you should be able to qualify, even though it's a new owner.
To confirm, the ERC is not paid back?
Correct.
Okay. For the RRF, can we exclude pass-through income such as sales tax and lottery income?
I think it's the sales tax income is not considered a gross receipt because that's just paid directly back to the taxing authority, whatever that's the DOR in Florida, that you can back those out. I don't know about lottery receipts. That's probably going to be included if I had to guess.
Okay, great. And then if you are a Schedule C and received a PPP-1 SBA approval with a loan number, but the loan docs say that for forgiveness, you will use the funds at least 60% for payroll, wages, etc.
What is the question?
It looks like the person is asking if they're reporting on their Schedule C, this loan forgiveness, will they receive the funds at least 60% for payroll and wages? I'm not sure. It's a little bit cryptic there, Mark. If you could rephrase that question at the bottom, I'll go back to that, Mark.
Well,
Is
wait,
there?
I think we should say, if you're a Schedule C taxpayer, that's an independent contractor or a sole proprietor, and got a PPP loan, it's automatically forgiven. If it's based upon the net income on line 31 of your of your Schedule C, then you're considered to have spent it on all the right things the moment you get it, even if you buy a boat with it or take a vacation. Now, if you are an independent contractor and you pay W-2 wages, then to the extent that you got PPP because of the W-2 wages, that's a different story. And I think that answers Mark's question.
Okay, I think so too. And he did provide clarification a little bit further down. I think that sometimes the questions are not allowed to be asked fully. Is there an EIDL forgiveness?
No.
Will there be any continuing ed credit for this seminar? Yeah, we wish.
If not, there should be.
Right, exactly. I agree wholeheartedly. I think that's an application process we have to undergo, though. How long is it taking for a PPP approval now? How about funding, and how long for funding after approval?
It depends on the lender. Here in the greater Minnesota area, and depending on the lender, it's taking about 2 weeks to 4 weeks. The PPP loan documentation, after it goes through the lender and is approved by the lender, has to go to the SBA. And again, not accusing the SBA because they are very, very busy. It's taking longer than usual for the SBA to approve the PPP loans.
Okay, great. And then how do you determine eligible wages if the business was shut down partially in the first quarter and partially in the second quarter?
Yeah, so when you are qualifying, I guess I should have clarified this when I was walking through. When you're qualifying based upon the partial suspension, you only get the credit for that number of days and that exact time period where you're actually suspended. So the shutdown order started on April 1st and ended June 30th. You would get the credit from April 1st to June 30th, no more, no less. So if you had 1 day suspension, you qualify for the entire quarter. It's just that 1 day you were suspended. Hopefully that answers the question there.
Okay, great. And then this question was asked a couple times. For 2021 ERC, the quarter 1 2021 income or gross receipts should be 80% or less as compared to quarter 1 of 2019. This person received PPP2 in quarter 1 of 2021. Should the PPP amount be included in the gross receipts of quarter 1 of 2021 to see whether quarter 1 2021 gross receipts are 80% or less as compared to Q1 2019 for the ERC calculations? It's a really good question. I know it's very complicated, but if you need to read it, I would jump into the Q&A. It's a really solid question.
The answer is no. Yeah, the answer is no. You don't have to include your PPP revenue in determining whether you've had a reduction in revenue for ERC purposes. Mm-hmm. You do have to include it for the restaurant revitalization program calculation. Let me mention, I looked it up while we were talking. A non-US citizen can be qualified as a non-citizen national and get an EIDL loan. What the heck is a non-citizen national? I don't know. That would be the next question. But there is an SOP 50/30/9 where you can look that up, or if you can't find it, send me an email and I'll find it for you.
Thank you so much, Alan. Have you heard anything about other industries like travel being added to the Shuttered Venue Act?
I'm sorry, go ahead.
I'm sorry, I said I haven't.
Nor have I.
Okay. This is a tax question. I'm not sure if you guys can answer. The PPP and EIDL reporting go in which IRS forms?
Well, since they're not taxable, I don't think they go on any IRS forms. Was it a trick question?
I don't know. There wasn't like a jack-o'-lantern or like a wizard next to it, so I'm not sure. You can't use emoticons in the Q&A, so I'm not really sure if it is or not. For the restaurant grant, can the wages used be the same as the employee retention credit wages?
No, you can't count any wages in the same place across any of these programs. So if you get a PPP loan, you get ERC, and you get the restaurant fund, you have to allocate the wages across all three of those programs. You can't duplicate and double dip in any of them.
This is a really interesting question. Nonprofit that teaches kids and adults about horses had to cancel a major event, which included food services. Are they eligible for the RRF?
I happen to know that client.
Yay.
Yeah. No, it's the operator of the venue, but here's a negotiation issue that you may want to consider. If you find out, if you're a contractor to a entity that is a shuttered venue grant operator and they get money, you can go back and attempt to negotiate an arrangement to share in their benefit because it's a grant, and given the relationship you have historically, it probably would be a good idea to try that.
Great point.
Awesome.
The horses may apply if they file a Schedule C.
For the RRF, this person has a restaurant on a fiscal year ending in August and eager to hear from the SBA what documentation must be provided to show revenue loss. Thoughts?
We don't have the applications available yet, but Brandon, would you guess they would be similar to the SVOG, income statements, et cetera?
Yeah, I would think just a calendar year income statement or profit loss statement or something that you could run a report on would be what they were looking for, because obviously the tax returns aren't going to help being on a fiscal year.
Awesome. And then S Corp 100% owner can get the ERC on their W-2 wages. Is that correct?
Brandon, I think it's worth a 1-minute conversation here. And then this is one where the experts are not agreeing.
Yeah. So
Brandon,
there's articles out there that say that 100% owner does not. Anyone over 50% does not get credit for their own wages. We're of the opinion that they do, as well as their spouse. If you look at the IRS FAQ on the topic, it refers to people that are related to more than a 50% owner not being eligible for the wages paid to the related individuals, but it doesn't mention in any of the related party rules that they have that the owner's excluded or that the owner's spouse is excluded, but any other relative would be excluded. And when you go through the statute, it's a little bit confusing, but the way I read it and the way Alan's reading it is that the owner and the owner's spouse, you can count their wages. It's just other related individuals do not count.
I think you rush out and get that thing filed immediately before the IRS pronounces that you can't do that. I think
it's part of the policy that says it's better to ask for forgiveness and permission.
There you go. And just to add another point that to finish on that, it's interesting that they published the FAQ on that, but then in the IRS notice that was issued after the publication of the FAQs, that wasn't mentioned or addressed at all. And in the most recent guidance just released today, still not mentioned at all. So I don't know that the IRS even knows the answer to that right now.
Goodness sakes. Thank you guys for that answer. Can you get both a PPP second draw in 2021 and apply for Shuttered Venue?
I don't
Yes.
think
Yeah,
right.
your grants just reduced by the amount of your PPP loan.
and you should get the PPP too, and then that's going to reduce your shuttered venue, but it probably won't reduce it on a dollar for dollar basis. So go for it.
Yeah.
Is there doubt about ERC being allowed for shareholder/employee wages?
That's what Brandon was saying.
Yeah. And does the ERC credit on the amended 2020 941 filed now have to be reported on the 2020 income tax?
Yeah, that's one that we're hopeful they'll provide some guidance and maybe a form to adjust in 2021. But as of right now, the credit you would receive for retroactively applying for that would reduce the wage deduction for 2020. So if you've already filed your income tax return, you'd have to amend that income tax return to reduce your wage deduction by the amount of the credit.
And I know they posted the FAQs for SVOG today. This question is based on total annual gross revenue. Is SVOG based in 2020 versus 2019?
Right, the link to those facts are in one of the slides, Paula.
Okay, fantastic. Thank you. The EIDL loan does ask you if you're a U.S. citizen. Don't know what happens if you answer no. That was in response to someone else. Does sole proprietor meet eligibility for the ETRC if they use subcontractors? I'm thinking that's ERC, but
no, it has to be W-2 wages. 1099 compensation won't count.
Unless you're a fishing boat owner, and then
That's
it
for PPP.
Oh, that's right. Sorry.
Yeah.
Okay, never mind. I got all the fishing boat owners all excited. I apologize.
The recovery startup business has to have started after February 15th, 2020. What about businesses that started in December 2019 or January 2020? They seem to have slipped through the cracks with no prior revenue.
Yeah, so that's a good question, because I think there's some slides in our deck that show what you have to actually compare to. There are comparison periods that you don't have to necessarily compare back to the full year of 2019 or the first quarter of 2019. There's some alternatives that could apply in that situation where you start a business in the first quarter of 2020 or the last quarter of 2019, and it'll show you what you have to compare to.
Fantastic. If a business receives the PPP-1 and then sells in Q4 of 2020, can the new owner qualify for PPP-1? I think we did answer that question already with respect to change of ownership.
Right.
Okay. Can PPP funds be used to pay a bonus to employees who have worked through the pandemic at reduced salaries?
Absolutely. That's a great idea.
Fantastic.
There is a limit though. If they're a shareholder, you can only pay $20,833 of wages, and I think $46,154.
Well, you can
24-week period.
You can use it for that. You just can't use it for forgiveness above those amounts.
And I think we already answered this piece. How long for PPP funding after approval? I think you guys said about a week or two, depending on the lender.
Or longer.
Or longer. Okay. For 501c7 organizations that have just become eligible for PPP funds, can they be applied to expenses from the past year when they were not eligible?
I don't know.
Yes, but they're not going to get the forgiveness, because the forgiveness
Got it.
is what you spend on expenses going forward.
That's a really great clarification point. Thank you for that, Alan.
Thank you for
EIDL
just what a 501c7 is.
EIDL loans can be refinanced with a PPP under certain conditions based on the timing of the EIDL, correct?
Yes.
I love those simple answers. We're seeing a 24 to 72 hour turnaround time PPP loan approvals for submission from the lender to funding. And that's from one of the banking folks that are on here. So that's really good information for people to understand. For a company that paid with a 1099 form, can they apply as well?
No, PPP is only for the
Only for W-2.
Yeah.
Got it.
Retention credit.
Yep. And regarding forgiveness of the PPP, what are the timeframes used to calculate the forgiveness and when to apply for that?
Well, you have to spend the money, and you have up to 24 weeks, and you should probably apply once you've spent the money.
Awesome.
And you have 10 months from the time the money was spent to apply for forgiveness. Alan, back last fall, I believe, and I don't want to put words in your mouth, you were suggesting to some borrowers to hold off applying for forgiveness, given the new rescue plan criteria. Do you still feel people should hold off, or should they move ahead?
I think you go ahead now. Absolutely. Especially if the rules are favorable to you before they change for the worse.
Okay, good, thank you. Paula, any more that we can answer quickly?
All disappeared.
Oops. Nabil, are you on the line? Can you pick up?
Playing the part of Paula is Paul. Hello, everyone.
Love your bow tie.
Thank you very much.
We got another
Thank
question.
you.
When Paula comes in, I could ask the questions. Where do you find the shutdown orders to determine ERC?
I think, well, you could look at Governor DeSantis's orders for Florida, that, you know, the executive orders that he issued on when the businesses were shut down, and, you know, in the second quarter of 2020. And then there's local government orders as well that some counties and some cities have.
We're in client section.
Yeah, Paula, put yourself on mute and allow Nabil to finish up, please. Thank you. Nabil.
Yeah, thank you. So I guess they could search online, they'll find them, right?
Yeah, and it has to be a government order too. It can't just be, you know, press releases don't count. It's got to be official government orders.
Okay. All right, another question. The question concerning reporting the PPP forgiven proceeds on tax returns. We are reporting those as other tax exempt income in order to keep basis balance sheet in balance.
Yep, that's correct.
Okay.
Because it does increase basis, and that would make sense.
Okay, when you say no double dipping, are you saying that if we got PPP, then we can't get ERC?
No, you can get both. It's, you can't count the same wages twice. So if you have, you know, $20,000 of wages and you use $20,000 of wages to count towards PPP forgiveness, you can't count that same $20,000 of wages towards the credit. But if you have $40,000 of wages and you use 20 for PPP forgiveness, you can use the other 20 for the ERC.
Right, so keep a spreadsheet separating all the different reportings. Okay, how long for PPP funding after approval? The answer was for 2 to 4 weeks for approval. There was no answer for the funding in itself.
Right. We have, I guess, a couple of bankers on the call. My experience with our clients, Nabil, here in the Minnesota area, is once the SBA approves it, it's less than a week for funding.
Yeah, that's been my experience too with the clients that I work with. Okay, somebody said, wow, that's great. It took us 2 months for application to funding for PPP2, just for your information. That was probably in the earlier days. Is that correct? Barry, any input on that?
No, not at all. I mean, we go back to the early days and it's like Mars and Venus. What we're dealing with today is different. The lenders are more educated, they're more responsive. The borrowers are smarter. And thank goodness, you know, life is beginning to open up again, and some of the businesses that were having an exceptionally difficult time are beginning to come out of it, and that makes us also very happy.
Okay, great. Yeah, and then last one, if you have an SBA loan number, will the funds be there even if they say they run out of dollars?
Let's hope so.
Yeah, there was a couple of our clients who got a response and they copied me, And the information, as long as you have the SBA number and it's in process, and you haven't gotten any requests for more information, our clients have been told that they have a good chance of getting the loan funded.
Yeah, and particularly that they increase now the size of the loan that is allowed, so that tells me they got some funds. One additional question came in. It's an accounting question. If the PPP1 loan is forgiven in 2021, can you book this as forgiven on the books for 2020?
We think you can if you were pretty darn sure that it was going to be forgiven. It's based on the facts and circumstances as of December 31st, 2020. There's support for the proposition that you can.
Okay, excellent. I think we covered most, I would say 99.9% of the questions. We've exceeded the time for this session. I want to thank you, gentlemen, and Paula, who's no longer here, for your time and your effort. This has been excellent. This is one of the best sessions that I sat through. I really appreciate all your efforts. All the questions that were answered were not easy to answer, I can tell you that. I'm pretty sure our attendees found it very useful. We're going to have this recorded, available on our website. The questions and answers will also be logged there for people to be able to review again. If any of the attendees would like to request a mentor, please feel free to go to minnesota.score.org and request one. One will be assigned to you within the next few days. And thank you again for attending. When you exit the session, you will be prompted with a survey. We would really appreciate you taking a couple of minutes to answer it. Gentlemen.
I'd like to just add my thanks to both Alan and Brandon. We've had 6 of these webinars. Each time we've had either members and outside speakers, and this is really the best one we've had so far. So thank you to both of you. I really appreciate your help.
Yeah, thanks to you, Barry. Hats off for all the volunteer work you do. And Brandon, thanks for being the brains behind the operation.
Yeah, thanks so much for having us, Barry. We're glad to do it.
Have a nice evening, everybody.
All right.
Bye-bye.
Take care. Bye.